Well, I don't think it's surprising. I mean, what we've seen in the last few months is quite unprecedented in the crypto space. And let's not forget that one of the pillars of the SEC is really to protect investors. And I think what happened in the last few months really gave them that kind of public and political support to extend that kind of oversight to an industry that has lacked a little bit of degree of oversight in the past few years.
Who are these tighter rules going to affect more in the crypto space?
Well, I mean, we've seen recently from last night the crypto custodian. So finally, we will probably have in several jurisdictions the definition of a custodian for digital asset that has to be independent, that has to provide a secure service, that has to segregate clients' assets. So that was just about the right time to do this. But most of the regulation will go, I think, will target those entities that are called exchanges that actually provide a whole range of financial services to retail and institutional investors. And some of those financial services can fall under regulation that already exists in TradFi. And I think that's really where the SEC will go and look at aspects that can be tackled to protect investors.
That's interesting, Alessio. Can you give us a bit more colour on that? Because whether it's a commingling of assets and then to your point of exchanges perhaps should not be running their own book, what were exactly the lessons learned from FTX and how are they going to be applied to the regulatory environment and the regulatory framework, I should say?
Well, sure. Okay, so if we look at exchanges, again, we call them exchanges, but they're actually more or less banks. They take customers' deposits and then they do lots of things with these deposits. They offer investment products. They participate in the primary, secondary market. They offer sometimes custody most of the time. So they're kind of really integrated financial institutions. So I think the first part would really be segregating some of these pieces that are now all collapsed into one entity, which is the exchange. So for example, starting by segregating custody from other activities. Then I think the regulators are going into the specifics of each product that they're offering and seeing whether those products can be classified as securities and whether the right disclosures are made to investors, right? And this is what happened basically with all the earn lending products and the staking products. And that's where the discussion these days is, right? So are they securities? Are they being offered in a proper way to investors? Or are they not securities just because the underlying asset is not money, it's not US dollars, but it's crypto?
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.